Well, hello, beautiful people. This is Jessica Jones with Taurus Financial Solutions coming to you today with a quick video on life insurance. I'm not here to tell you you need it or don't need it. You just need to know the different kinds so you can make the proper decision for you and your family. Remember that life insurance is not for you, it is for your loved ones that you leave behind. So if you have anybody that depends on you for yourself as a human or your income, then it's a good idea to take a look at life insurance and what that can do for you or your family, really. So there's two main types of life insurance. On one side you have a term policy, and on the other side you're going to have a permanent policy. And there's varying kinds within each one of those, so I'll go over that too. But let's start with the term. A term life insurance policy is going to be for a duration of time, a term of time. So the most common, are going to be like a 10-year, a 20-year, a 30-year. But that also encompasses your employer plans as well, most of them. Because if an employer offers that to you, typically now some of them you can take with you, but a lot of them end once you leave that job or you are whatever, you retire. Sometimes you have the option to take it with you. Usually you're going to pay a higher amount than you were when you were working for it. But that sometimes is an option. But for term, it's for a specific amount of time. Okay, whether while you're working there or for 10 years, 20 years, whatever. So this kind of insurance is to make sure for short-term needs, like let's say you have small children, you want to make sure, heaven forbid anything happens to you, that they will be able to go to college and have a good childhood and be able to have the means to do that, right, if you're gone. Also for like short-term things like mortgage. I want to make sure that your mortgage is paid off for your spouse or your kids should anything happen to you. So these are really good for certain, specific amounts of time. Now the thing to remember with these is they don't build any cash value. They're strictly a death benefit play, mostly. So if you don't die within that term, all your premiums are gone typically. In general terms, there are some little riders and things you can do, return a premium and get all fancy with your bells and whistles, but in real general terms with the term policy, if you don't die within that, let's say 20 years, your family doesn't get anything. You don't get anything. It's just expires. A lot of times they'll give you an option to continue it, but usually at a much higher rate. So we'll get into more details on that as well. But with the other side of the coin, the permanent side, that is more for legacy planning, for final expenses. If you want to make sure you leave something to your kids or your grandkids as a gift, as an inheritance, that's a good way to do it. Or if you just want to make sure your burial or any final bills are paid off as well. That's a good instance for the whole life. You'll hear a lot of talking heads and other financial people in the industry say, forget about permanent, forget about whole life, universal life. It's a waste of money. You should just buy term and then invest the difference in the premium. Because a term typically is going to be a lot less expensive monthly premium for you because it's going to expire at some point. So statistically, term policies don't pay out very often because you got to remember the insurance company has actuaries who are going to take your life expectancy and say, okay, we're betting that you're going to outlive this term. You're betting that you might not, right? That's why you buy it. Heaven forbid you pass away in that 20 years or whatever. So you got to remember I think it's like industry-wide is like 3% that term policies pay out. Now, if you're that 3% though, it's the most brilliant thing you ever did. Luckily with the term policies, they're a lot less expensive monthly, so it doesn't hit you so hard it's just protecting your family, right? And that's worth the premium, of course, right? So with the whole life or permanent life, they can come in different forms as well. You have what's called a whole life or like a final expense. Those are typically for 50 years and older. Usually there's very little underwriting. And it's usually will max out at about 25 grand, 25, 30, somewhere in there, depending on the carrier. If you look at a universal life policy, it's still a permanent policy, but it's a little more flexible. The permanent policies do build cash value depending on how you build it. So there's availability for access to it while you're still living as well. I'm going to get into a lot more detail on this. This is just a quick differentiation between the two main types of life insurance, so you guys can kind of decide what's best for you and your family. If you have any questions, reach out, let me know. It's taurusfinancialsolutions.net. As always, thanks so much for listening and have a fabulous day. Bye.